In this tutorial, I'm going to show you how to use spot trading on Bybit and explain the different order types available. First, let's quickly cover what spot trading is. Spot trading means you're buying or selling crypto directly, and you own the coins once you buy them. This is different from futures trading, when you trade contracts, which are derivatives and not the actual coins. Spot trading is usually best for beginners and is particularly useful if you are a long-term investor, since it allows you to buy, sell, and more importantly, transfer and withdraw the coin to another exchange or another wallet. Now let's review Bybit's spot trading platform. Go to the Trade tab at the top and select Spot. This will take you to the spot trading page. Here you'll find several different sections, like the chart area, where you can see live price movement, different time frames, candlesticks, even indicators if you want to use technical analysis. On the right side, you will see the order placement panel. This is the menu where you can place orders, whether it's market, a limit, a stop order, and it's also where you will enter the amount of crypto that you want to buy or sell. Below the chart, you will find the positions and order history tab. Bybit shows you open orders, filled orders, and your trade history, so you can track everything in one place. Lastly, your account balance. At the bottom right, you will notice Bybit show you something called Unified Trading Account. This means that both your spot balance and your futures balance are displayed together. This is different from what other exchanges do. And if you want to know more about how the Unified Trading Account system works, click on the question mark icon. Now let's get into the order types. The first order type that we will review is the market order. A market order is the simplest order type. It means you buy or sell instantly at the current market price. To place one, go to the Order Placement tab, select Market, then enter either how much crypto or how much USDT you want to trade. You can easily switch between the two by adjusting this setting, quantity in crypto or value on USDT. I'll select USDT. Once you confirm and click buy, the order executes immediately. Market orders are useful when you want speed and the certainty that your trade will be filled. However, the final price might be different from what you see on the screen. This is called slippage, and it happens when there is not enough liquidity, which means limit orders to match with the market order that you just sent. So your order fills at the next available price, and your entry will be an average of all of those available prices. The second order type is the limit order. A limit order lets you choose the price at which you want to buy or sell. For example, Bitcoin now is trading at 109.420. If you want to buy at 105, you can set a limit order at that price level. The order will only execute if the market reaches that price. Limit orders keep you full control over the price at which you get filled, but keep in mind that the trade will not go through, will not get filled, if the market never reaches your chosen level. Now I'm going to show you how to use take profit and stop loss orders. Take profit and stop loss orders are risk management tools built in already into Bybit. A take profit order will automatically close the trade when it hits a target price, and a stop loss order will prevent you from losing more money that you are comfortable with by closing the trade when it drops to a preset level. This is basic risk management, and you can use this type of order to achieve that. Now let's use a trade example. Suppose we buy $500 worth of BTC at market price. We will use a market order like we have reviewed before. We click on buy. Our order has been fulfilled, and we are now in control of $500 worth of Bitcoin that we bought at market price. The next step will be to go to the Sell tab. This will allow us to set a stop loss order. This means we will sell our coins if a certain price is reached. For example, if Bitcoin reaches the level of $105,000, we want to be out. The key setting here will be where to use a stop limit order or a stop market order. A stop market order will ensure that if the trigger price is reached, the order will execute immediately and you will fill at the market price. The same way a regular market order works. So for example, if we select stop market and type 105 on the trigger, the moment the price reaches $105,000 on Bitcoin, it will be automatically sold at the market just as a regular market order. The other setting will be a stop limit order will post a limit on the order book once the trigger price is reached. For example, if the trigger price at 105 is reached, we want to set a limit at 104 10900 and exit the trade there at a loss to be able to manage your risk. This will allow you to exit at this specified price, 104,900, but only if the price actually trades there. So this is the main disadvantage with stop limit orders, is that they are not really guaranteed to fill. So let me give you an example. If the price gaps through this area and our limit order is skipped, it means it will be cancelled and you will be stuck in a losing position. That is why I honestly prefer to use stop market orders, because they actually guarantee to get filled no matter the slippage. Usually the cost of the slippage is worth the peace of mind that you have when you know that your order will be actually filled and you will be out of the position at a control loss, and that's what risk management is about. So now that we have decided to use the stop market order and we have decided our trigger price, all we have to do is just to select how much of our Bitcoin we want to sell at that price at a loss and click on sell. So now we can review our stop loss order, which is under the open orders tab under this section, and we can see that the order status is labeled as untriggered, which means the order is ready to be executed when the trigger price hits. And that is how you set the stop loss order on Bybit Spot. Now I'm going to explain you how the OCO order works on Bybit. Let's quickly go over what an OCO order is. OCO stands for once cancel the order, and it's a type of conditional order that lets you set two sell targets at the same time, one in profits and one at a loss. The moment one of the targets gets triggered, the other is automatically cancelled. So for example, if you set a stop loss order and then you set a TP order and one of them hits first, the other will be cancelled. Let's do a trade example. First, let's buy $1,000 of Bitcoin at a market, like we have discussed in a previous video about how market orders work. It's fairly easy. Now that the market order has been filled, we can select an OCO order to set a stop loss and a take profit. Now that the market order has been filled, we go to sell because we want to use an OCO order to sell our Bitcoin either in profit, because we want to sell our Bitcoin in profit, or at a loss in case a certain price is triggered. On the trading panel, we select OCO and then we select the price at which we want to sell. Let's say we want to sell our Bitcoin at 120k, and the second part will be the stop loss. If Bitcoin drops to 109, we want to sell all of our position that we just bought at a loss. The last step will be to just click on sell, and our OCO order is going to be displayed in this section. As you can see, it's yet again untriggered, and we have the two prices at which we are going to be exiting the position, at a profit and at a loss. Hope it helps.